Welcome to the channel. I'm the Swedish Dividend Investor. Guys, I know I said I want to focus a bit more on individual companies, but an ETF caught my attention and I wanted to take a look into it and do a valuation. If you're new here, we talk about dividend stocks and ETFs and we do valuations, all with a sweet Swedish accent. So if that sounds like something you're into, make sure to hit subscribe and like the damn video. The ETF I want to talk about is WTEE or EEI, WisdomTree Europe Equity Income UCITS ETF. It was suggested by a viewer named Mr. Kurasnai837. Alright, jumping on to justetf.com, we are going to compare it to a couple of favorites of mine as well as S&P 500. So, we are going to compare it to S&P 500, SPYW and FEUI. We are looking at the 5-year performance and we can see S&P 500 at 111.35%, FEUI at 53.8%, WTEE at 48.51% and SPYW at 45.31%. Now, let's check their total expense ratio and fund size. The TER is sitting at 0.29%, and it's a smaller ETF with 63 million euros in asset under management. For their top 10 holdings, we see some names seen in other European ETFs. We have HSBC Holdings, Enel, Intensa San Paulo, Engie, Total Energies, Allianz, Equinor, and this one will surely get butchered, Banco Bilbao Vizcaya Argentaria, AXA, and Rio Tinto. For the countries we have UK, France, Italy, Spain, Germany, Norway, Sweden, Finland, Switzerland, and other. And their sector allocation is the following: financials, utilities, industrials, energy, telecommunication, basic materials, real estate, consumer discretionary, consumer staples, and other. Now that we have a good overview, let's look at their dividend history and punch some numbers. First, I want to start by saying I hate the tickers here in Europe, and all the exchanges uses their own ticker. I'm naming it from what my broker offers, WTEE, but it is also called EEI. If you are unsure, just search for the full name. As we can see, it's not an uncommon sight with the European ETFs and their dividend track records. We have some growth, 45% since 2015, and looking at their growth numbers, we see a staggering 13.10% 3-year compounded annual growth rate, 5.73% 5-year CAGR, and 4.22% for the 9-year CAGR. We can see their yield is sitting at 6.07%. That's pretty good. This is not a covered call ETF. This is the yield if we divide the 2024 whole year dividend with today's share price. Now, there is something I would want to highlight. As you can see, the dividend until July in 2024 was 0.7002 euros, and this July we are sitting at 0.6411. So what happened? A cut? Well, let me show you. So we can see they used to pay twice per year, in January and in July. That is until last year. Last year they paid in January, July and October. But if we look at 2025, we can see they have paid dividends in January, April and July. And I believe they do this to start paying a quarterly dividend instead of twice per year. I checked their website and what do you know? It now says dividend frequency, quarterly. So the question is, how much will they pay? Well, if they want to match their 2024 dividend, they need to pay 0.1694 euros. If they can manage, that is. Alright, let's do the valuation. So I've gone with a discount rate of 10% for all cases. This is our required return. For normal case, I've gone with 4% growth of the dividend and a terminal multiple of 17. That's our expected yield 10 years in the future. 100 divided by 17 is 5.88, so a 5.88% yield. We land at a present value of 13.59 euros. For the best case, I've gone with 5% growth. Remember, we try to use conservative numbers here. Terminal multiple of 20, so a yield of 5% at year 10. We get a present value of 16.03 euros. For the worst case, I've gone with 0% growth for 6 years and then 2% growth for year 7 to 10. Why? Well, say they cut their dividend a bit next year or even this year, and who knows, maybe it will take over 6 years to grow it back to where it was today. So that's just a worst case scenario. Terminal multiple of 14, so a yield of 7.14% at year 10. We land at a present value of 9.69 euros. So, if you believe in the worst case scenario, this is the price you should pay today. Moving on with the mixed valuation. Since we don't know the future, I use a probability factor to get a fair price. I've gone with 60% probability for normal case and 20% each for worst and best case. We land at a fair price of 13.30 euros or 12.63 euros with a 5% margin of safety. So guys, this is a prime example of why I like to use higher yielders with low conservative numbers. We are 6 cents overvalued. In my books, that's almost spot on. If it plays out somewhat on what we calculated, we are looking at a 10% annual return, with about 6% of that coming from the dividend. But tell me what you think. Are you buying WTEE? Or are you going to see how much their dividend in October is before you buy? I'm going to wait until I see what the dividend is. But I like the high yield and low valuation on this one, and I'm considering buying it. But that's it for this one. Thank you for watching, and I will see you in the next one. I'm the Swedish Dividend Investor. Stay smart, stay patient, and keep stacking those dividends. Ha det gött!